Well, I think the government is going to be looking to increase spending by less than was previously planned. And they may well announce some tax increases. But I think they need to be careful about this because the main instrument that we have to curb inflation is the interest rate, and that's with the Bank of England. And the Bank of England is going to have to raise interest rates further. Jeremy Hunt needs to make sure that he's not tightening too much with his public spending and tax announcements when he makes them tomorrow.
OK, 11.1% though, that is alarming. 41-year high. Yes,
it's a very high rate of inflation. It's 5.5 times the 2% target that the bank is meant to hit. Now, the increase this month is mainly driven by food and energy prices, the rise from 10.1 to 11.1. If you take those out, inflation is still very high. It will be 6.5% without food and energy price inflation. And I think that's going to be the big concern for the Bank of England, that it's not just to do with food and energy prices. It's not just to do with the war in Ukraine. There's a more generalised problem of inflation in the economy. For example, furniture prices going up by about 10%, restaurants and hotels component in the consumer price index going up by about 10%. So there's a more generalised problem of inflation which the Bank of England needs to get on top of.
Bank of England had been predicting 13% though, hadn't they, in some instances, although we were hearing from Paul at the top of the show when these figures first dropped, and he was suggesting that this is probably as high as it's going to go?
Well, the Bank of England forecast that in the last 3 months of this year, and October, which we've just had the figures for, is one of those months, inflation is going to average about 10.9%, so just below 11%. Now it's gone above 11%. But I would be wary about saying this is as bad as it gets, because the bank's forecast doesn't really suggest that inflation is going to come down significantly until the middle of next year. So I think we're in for a few more shocks, perhaps, on the inflation front over the winter.
And where does that leave our viewers at home who are watching this and thinking, 11.1%, I can never remember it being that high?
No, well, it is hard to remember because it wasn't that high. It hasn't been that high since the early 1980s.
I remember.
And there may be some people who are saying, I wasn't even born then, and some people who've just got on the housing ladder and are going to see their interest rate go up quite significantly. They're going to be quite concerned. There is obviously going to be a squeeze on the economy because of higher interest rates. And that's why Jeremy Hunt needs to be careful of not making that squeeze too intense in the short term.
So what options does he have?
Well, I think his options are to ask departments to rein back on public spending. But there's some very big areas of public spending that the government really can't economise on, like health and education. I mean, the government spends money on things because they're of benefit to us, and therefore it's going to be, in my view, a long haul in terms of getting public finances properly under control, rather than just something that he's going to need to do for a year or two. There needs to be a long-term plan that's announced tomorrow, and he needs to take account of the fact that if he squeezes too hard, if he goes too hard in cutting spending or raising taxes, he may actually make the problem of the economy worse.
Perhaps not as bad as the disastrous coupling of Truss and Kwarteng and their mini-budget at the end of September. We've been told recently that that's cost £30-odd billion to the UK economy. Where does that money go?
Well, I think some of it is to do with higher interest payments that the government has to make. Some of it is a range of other things that were caused by all the volatility that budget unleashed. But I think that highlights the fact that that budget went in the opposite direction. It was cutting taxes. It was spending extra money. If you do too big a lurch with government spending and tax, then you can create unpredictable economic consequences. So Jeremy Hunt's got a bit of a balancing act to do enough to show that he's getting public finances under control, but not to destabilise the economy by tightening too much in the short term.
Can 11.1% inflation, the highest in 41 years, as you said, can that be good news for anybody?
I don't think inflation is good news. There's a good reason why we have the Bank of England tasked with trying to keep inflation at around about 2%, which is sufficiently low that nobody would really notice it.
I was thinking particularly about savers, interest rates going up as a result of inflation and savers.
Well, there is some upside from higher interest rates for people who are trying to save and want to rely on interest income. And actually, to some extent, we're redressing the balance from a long period where interest rates were too low, in my opinion, and where savers, therefore, were disadvantaged. Now borrowers are going to experience increased costs, but as you say, savers are likely to benefit from higher interest rates.
Okay.
But the question is really getting the right level of interest rates for the economy.
Sure.
And the priority at the moment for the Bank of England is going to be to raise interest rates to a level where it actually begins to control inflation and bring it down.
Let's see what happens after tomorrow's autumn statement. It's good to talk to you, Mr. Sentance. Thanks for coming in to see us. Thanks.